Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can better understand what we see in the global landscape and also if we're making any changes within our allocation and our global tactical portfolios across the board. You know, a lot of numbers coming out on earnings, of course, last week and more even this week. Generally speaking, earnings in the U.S. have been exceeding expectations. We're seeing some revenue growth and earnings growth. We're seeing fairly tame inflation. We're seeing Ben Bernanke made a couple comments about a week or so ago, essentially that he is there to support the economy, keep inflation at a reasonable level, and get unemployment down. Numbers that are coming out of China have been a little bit weak. Generally speaking, other emerging markets, though, are seeing just a little bit of signs of life. In fact, if I look over in Europe, it looks like they're coming out of their double-dip recession. I ultimately see some powerful trends emerging. I wouldn't be shocked if we continue to see an uptrend through the rest of this year. But generally speaking, the world economies, the ones that were really depressed, especially in Europe, seem to be coming back just a little bit. Our economy seems to be growing at a decent clip, around a 2% GDP growth, which is ultimately positive. I see interest rates staying probably about where they're at ultimately, and I ultimately see investors who are overweighted in bonds going to greatly underperform. I would not be surprised as we progress through the rest of this month that we may be adding some allocation back into emerging markets as they are starting to stabilize and we're seeing just a little bit of an uptrend. Remember, the U.S. marketplace greatly outperformed the first half of the year. Greatly underperformed were emerging markets. Many of them are down 20% year to date and still are, but they're starting to show signs of life. If this trend continues, we may be adding some allocation into emerging markets on the cheap. This is exactly what the doctor ordered, meaning sell towards the highs, buy something that starts to reverse from a relative weakness back into relative strength. We're watching these indicators closely, and we will keep you informed about any important changes that will be made. But generally speaking, we're off to a great month in the month of July. Our clients generally across the board are having a good outperformance, and I firmly believe that investors who are patient, who have a strategy, especially like clients of Resney Wealth Management, are going to be well rewarded. I ultimately believe there's a lot of craziness that goes on in the media. In fact, if you read our newsletter this week, you'll read a lot about, we talked about emotional headlines. In fact, the amount of headlines that come out on a daily and yearly basis. At the end of the day, you can't base your investment decisions around emotions and all the hype and hoopla around the media. You have to use a sound investment strategy. It's kind of amazing, even though we've had a decent run-up since the market correction back in 2008, we still see people that call my radio show and TV show every day and also call our office for consultations that are basically sitting in cash because they believe the world's going to come to an end. We're also seeing the same thing about gold. One of the things that is a good determining factor often of a market top on any investment sector, especially gold, was everybody and his brother was talking about gold. You noticed all the gold commercials and all the gold stores that popped up over the last 2 years. Well, guess what? We're starting to see all those commercials are dying away, and we're also seeing some of those gold stores are going to probably start closing. That usually tells you that the small investor piled in at the top and then will start to bail in towards the bottom. I ultimately believe that gold is not a great asset in general. It's what we call a speculation asset. Now, while gold is an asset category we keep in our stable and we will review it on a regular basis, it is not in any of our portfolios, and it hasn't been since December because it became relatively weak and it continued to be on a relatively weak course as it descended 20% year to date in 2013. Again, we run a strict strategy. Relative strength puts us in the right categories at exactly the right time, and of course will help us reduce risk in it. We do have recessionary periods and moments. I firmly believe we are on more stable footing in the U.S. economy, and I firmly believe that we will continue to see slow improvements not only in our economy, the emerging market economies, and in Europe. Of course, if you're a client, you have a question about your portfolio, please call the office. If you're not a client, please call our office for a consultation. We always like taking on new clients who are nice people to do business with. Make sure you have yourself a safe and profitable week.